We treat this as no different than if we were doing it for ourselves or a loved one. And we want our clients and prospective clients out there to know that. And we do that by doing what we say we'll do. You request a report, we're going to give you a darn report. It's crazy to me. There's a lot of other outfits out there that are actually just people that are selling leads online, and they'll offer a free report. You give them your email and information, they never send you a report.
Right.
We do, and I guarantee it. And if you don't get your report, check your spam folder. Sometimes it goes there because of the Googles, the Gmails of the world and their security parameters. But if it's not there, simply email me direct, Jeremiah@annuityassociation.com, and I'll make sure you get the report.
Yeah, and then that next step after that report is, if you're watching this and you've seen this video, you found us either on YouTube or through some other link, maybe on Facebook or Instagram or something else. The next step then is to really go to that Zoom meeting, and that's where we can share the information with you, share our screen so you can see it firsthand. I alluded to us having the ability to be transparent and for you to see it firsthand. And that would be that next step. So if you've got the accessibility to YouTube and you were able to search us and find us, I can promise you can get on that Zoom meeting with us and we can help you there.
And the biggest thing with that is when you're ready. So we don't want anybody to feel pressured to ever meet with our team of advisors. We want you to work at your own pace. The first step is just requesting that free report. We'll send you some helpful content and emails to help you, lift or raise or increase your annuity IQ. But again, when you're ready to speak to somebody that can truly help you understand how to look at this marketplace and make an educated decision, or ultimately help you make your own decision, that's where we come in. So whenever you're ready for that, annuityassociation.com is how to do that. So we got one more annuity type. Why don't you take us home with that last annuity, Zach?
Yeah, so that's a fixed index annuity. Fixed index annuity can be served for two purposes, and they are different and how they're utilized. One purpose would be for accumulation, and the other purpose would be for income. It's just defining, again, what we're using it for. What vehicle are we plugging this into? So if we know that we're using it for the purpose of accumulation, a fixed index annuity can provide value in that it has that principal protection. So there's a market floor, if you will, to that performance of the designated index. We're participating in that index return. And what's different here with the accumulation aspect in comparison to that multi-year guaranteed annuity is that there's a higher upside potential. Granted, no guarantee to that upside potential, but the guarantee lies in what you're not going to lose. So there's a floor that comes to this. There's no downside market loss that comes with this annuity type. So there's your guarantee that comes with that.
Yeah. And that's really interesting too about the fixed indexed annuity, which is one of the fastest growing types of annuities in the country today. More money's flowing into that annuity type than the others year over year. And the reason is because a lot of innovation has come to that specific product. The fixed indexed annuity was actually designed back in 1995 by a very small insurance company. And basically what they did is they looked at the other annuity types at that time, and they tried to take and pull out the good features of those other types of annuities and roll them all into one product. So if you look at it from, the single premium immediate annuity aspect, is a SPIA can offer you a guarantee of lifetime income. So a fixed indexed annuity has that feature. You can add a lifetime income rider to the contract, and that income rider can be structured to pay single life for just you or joint life for you and your spouse. And it has strong guarantees of how that income builds over time. So then that adds in that deferred income annuity benefit, right? Taking the ability to defer this income stream and allow it to grow guaranteed. And right now, at this point in time, February 7th, 25, we're seeing interest rates on those products anywhere from 7 to 10%, depending on the specific one. and that's guaranteed to grow that income benefit value each year of deferral. It's very powerful. It's a very powerful tool to mitigate sequence of returns risk. So we'll touch on that here in a later segment, but essentially one of the biggest risks of somebody approaching retirement is not being able to know exactly what the returns of the market are going to be. The average of the market doesn't matter. It's when those returns unfold each year and how they unfold each year can be either a good thing to your bottom line or a bad thing. But that's what it helps with, is mitigating that unfavorable sequence of returns risk. Because you can take a portion of your money and get a guarantee of 7 to 8%, let's say, every year, you know exactly what it's going to be when you turn on that lifetime income stream versus taking chance in the market. The other benefit that they pulled was the MYGA, right? The multi-year guaranteed annuity, with having strong fixed rates. And in an indexed annuity contract, you can not only have the ability to allocate towards these index crediting strategies, but you can also allocate to a fixed account. And those fixed accounts can be very competitive. Right now we're seeing 4.5 to, there's one product on the market right now with just the fixed account for the first year. And I want to say it's like 10%. And it's unique. It's not guaranteed every year at that rate, but for the first year it's 10, and that's pretty strong. But so they took that MYGA feature, the fixed rate. You can add a fixed rate bucket in your allocation inside the fixed indexed annuity. And then the last thing is guarantees of principal protection. So again, like you said, Zach, you have all of this peace of mind and certainty that no matter what happens to the markets and the uncontrollables associated with the markets over that time frame, your principal is completely guaranteed. The worst you can ever do in a fixed indexed annuity is a zero in a year. You can't incur any losses, and that's really powerful. Being able to eliminate the volatility of the market but still give your money fair rate of return potential can be very, very powerful. And not only just economically, but psychonomically, giving you a lot of peace of mind that, hey, no matter what happens, I don't have to stress. My money's protected.
Right.
So it's a very unique product. I think it's very innovative in the way that it's structured. And the one thing I will tell you, though, is not all fixed indexed annuities are created equal. You're going to have some that are better than others, no different than any other type of industry that you might be a consumer of. You go to buy a car, there's good cars and bad cars. You go to buy a TV, there's good TVs and bad TVs.
What do you think
are no different
differences or things to look out for of a poor one versus maybe a stronger fixed index annuity?
Yeah, that's a great question. I think it really comes down to understanding the mechanics first of an indexed annuity and how the money works inside the account value, and then how the money works if you have an income rider attached to it, how the money works in the income benefit value side of things. But really a couple of the things that can, I guess, determine a better annuity, a better fixed indexed annuity versus a worser one or a bad one would be understanding that the indexes that are offered inside the contract, those aren't created equal either. There's going to be good indexes and bad indexes. If you get into an indexed annuity that has bad indexes, then you're going to be probably having some more to be desired down the road, because the returns and the return potential are going to be lackluster. So I think that's where it comes down to working with an expert. That's something we pride ourselves in. I would put us against anybody out there. And I know that's a bold claim, but I've seen what the competition does out there. There's nobody that knows fixed indexed annuities better than us. And more specifically, nobody knows the indexes themselves better than us. So we are experts at understanding the index methodologies, the mechanics, of how they work, and then finding the right vehicle, or in this case, the right fixed indexed annuity that offers those indexes, the stronger indexes. And so we look at a couple things, the indexes, other things that you could look at that may make an annuity better than others would be the carrier behind the annuity, who's offering it, what's their rating, what's their track record. Another thing would be renewal rate history on those index crediting strategies. You know, the rates that they're offering you in the contract, do they stay true to them? So there's renewal rate integrity. That's one thing we look at. You know, the fees, you know, really the fees in an indexed annuity are very transparent, and they're simple. You either have a fee on an income rider, or you have a fee on what we call a performance enhancement rider, which is tied to the index crediting strategies, essentially for paying an annual fee, which is optional. If you elect to have a performance enhancement rider, you can juice up the participation rate or the cap rate. You can get a higher participation in a performance enhancement strategy than you can without one.
Right.
But that's optional. It's not required to pay it, but we see value in it at times.
So a higher potential for return, but again, no guarantee to really that outperforming. Okay.
Yeah, 100%. There's no guarantee, but that's really where it comes down to finding an expert that can help you learn to assess these products, and more importantly, the intricacies of the products, and this being the indexes themselves. A lot of times what we find in our industry, and one of the wrongs that we're trying to change, is that a lot of advisors or agents, they'll sell by illustration. That's the term I give it, sell by illustration, where they're trying to show you this really pretty back-tested number of the index and how it worked over the last 10 calendar years. But what oftentimes people don't realize is, because of this product still being relatively new, I mean, it's been around over about 30 years or so, but it's still new. A lot of the innovation in the fixed indexed annuity world didn't come until the last 5 to 10 years. A lot of that innovation came and it involves the indexes. So the indexes themselves, a lot of them are newer. A lot of them are brand new. And what happens is that these indexes, they'll take them and they run them through a simulation or a back testing, if you will, on how that index would have responded during that 10-year period of time. So knowing that they have hindsight in their favor, these investment banks and institutions that design these indexes, they can build it to however they want it to perform, because they have the data to see how it would have and should have performed. But it doesn't mean that that's how it's going to perform in the future.